Hello guys, and welcome to another market review. I'm gonna start by saying that the next market review will be hosted December 28th, and there will be no market review the next week because I think that we are coming into year end and volatility just dies during the last week of the year. So it's, in my opinion, much better to stay away from the markets and just observe. Plus, we will review this before the year starts, but the yearly open is going to be a very important level for us to play around. So we should put all our efforts around the time where we have the level to play with. So the reason I want to still do a market review for the next week is because we have tons of news next week, and that translates into volatility. So there might be good trades waiting for us during this week, but it might be a minefield, so we have to be careful. But I think it's worth paying attention. So let's kick off by looking at the euro. So last week we were bullish euro. We were anticipating a breakout, a continuation of the breakout that we had already seen on the daily time frame when we look at this trend line breakout, right? And we also had a drive off the monthly open, and there hasn't been any retest, and it's been clearly strong. So there's no reason to get bearish on the euro. Moreover, there's some research and macro supporting the idea of a higher euro targeting 120, 122, because there's a clear divergence between the Federal Reserve and the ECB when we talk about the balance sheet. So the European Central Bank is contracting and the Federal Reserve is expanding the balance sheet. So that is going to push the euro higher, and there's not going to be any hikes from the Fed, and we could also have some new guys that are pushing for rate cuts when they are not priced in. So everything is lining up pretty well for the euro next year, and when we have the yearly open, it would be much easier to just position from a monthly perspective. Also, when we do look at the yearly chart, like I'm gonna get rid of this, but this looks like a breakout dip on the yearly chart. So that's massive. That's massive. Euro is going to go much higher within the next months because this is a yearly chart, and who knows, right? What it does and where it goes in the future. But I think 125 next year is very doable, and let's see. It doesn't make any sense to keep thinking about those things when we trade intra-week setups, but it's good to have that view. So we were anticipating euro to go higher last week, and that's exactly what happened. On the daily time frame, we saw the euro close below the weekly open and this key level, this mid-range, and you know, around the weekly open, we had like 3 daily closes below. So that already gives us a setup, just like it did here. You see this? 3 daily closes below a level. The moment you get a close above that level, the market is going to hold higher. And these are daily closes. So the strength of the move should not be faded. See that? The moment you get daily close above, boom, the market just pushes higher. And this is something that's very, very clear on the New Zealand USD pair. Look at this, 4 daily closes below a horizontal level. The moment you close above, boom, you have an uptrend. Same thing it does here, boom, uptrend. I was waiting maybe for price to close, to attack the monthly open, you know, for this market to be a bit more volatile coming into FOMC. However, we just saw just chop. I was expecting some chop, right? But I was thinking that maybe we would have some volatility and we would see a dip into the monthly open. However, the market just remained range bound until that happened. And it gave you triggers on the long side, it gave you triggers on the short side, but it was pure chop. So it was much better to wait until until the week developed and position yourself around the mid of the week. So going into the hourly, it was very clear the market intention. You know, this is Monday's low. So look at what the market does on Tuesday. It just sweeps Monday's low, closes above, and you start seeing this price action, which I really, really like. When you're looking for longs, you see a swipe, and then all you have are these candles with big wicks, right? On the down part of that candle, they're just showing buyers stepping in, and a market clearly being enabled to close below a certain area. So then we have an attempt into the weekly open, close above on the hourly, and strong close below, right? It's this on the H4. So the moment you get another close above, I think it's very much said and done that this market is going to go higher, because you've swept Monday's low with a daily time frame breakout and a potential yearly breakout as well. And when you look at what happened before we broke above the weekly open again, was this. You have the same thing again. The market now doesn't want to close below this area, which previously was around here. So the base is moving higher. Look at this. The moment we close above the weekly open again, it just goes. And FOMC was in this candle at 8 p.m. on the evening. So this tells me something about that price action, is that the market was clearly bullish even before the FOMC took place, but it was just accumulating, refusing to break lower before the event happened. So by the time the FOMC takes place, you've already swept Monday's low, shown clear signs of absorption, a base moving higher, a reclaim of the weekly open, and you are already good to go. And that's what happened. So the strength on the euro is not something to fade, because this is very, very early if we are seeing a trend forming. These are the early stages of that. When you consider that the minimum target for this is 120. So the bias should remain long. So next week, I don't think the market is going to come here because it's been really, really strong, right? And the monthly flow is bullish. We are expanding on the monthly candle, and this extension could be a weekly extension. This is not a proper monthly extension. A monthly extension should be something like this, at least 240 pips, right? And having volatility due to lots of news next week, price should go higher. It really should go higher, and at least it should move a lot, right? So any dips are good for buying. However, I just wouldn't go long from this level. So very similar plan to what we had last week. We're gonna have a weekly open around this level, and before I get long, I really want to see price just trade a bit into this area here, show some bullish price action just like the one we were seeing around here, then reclaim the weekly open. Then we consider this the low of the week, and we're good to go. And we take profit around this level, 1.182. That's simple. I don't want to overcomplicate this. Okay, if if the euro went higher without making what I consider a significant low below the weekly open, maybe you could try to fade it on Thursday and Friday, especially if the move is sharp, right? Like this one. That increases the likelihood of price pulling back, especially once the monthly expansion has already taken place, right? But I really don't think that price should go below here if we are bullish euro, right? So I think that this is a good place for if you get long around here, right? And I would put my stop loss on a H4 close below this level. But even this looks like a SAR when you look at it like this, right? The low, Thursday's low was just this high here from previous Thursday. So I think that really price should bounce from this area here. So I don't want to see the euro go below this zone here, and I don't think it will. So yeah, I think that's pretty much everything I wanted to say on the euro. I really don't want to cover GBP because it's a bit messy and it's not showing the strength the euro has. So for me, it's an easy way to lose money if I trade the GBP over the euro. So I'm quite surprised with gold because our expectation for the week was that we were going to see gold go a bit lower because this breakout didn't go anywhere on the week, and I was expecting that momentum to carry on, but it went nowhere for a whole week, right? Even though it didn't really broke lower significantly. Now, last week, it did what we expected it to do 2 weeks ago, which was carrying the momentum from this breakout, right? But actually, when you look at what price did it ever give you any signs that it wanted to go lower? No, it really didn't. I mean, it didn't break below this low. It swept this one, right? And reclaimed the weekly open, and it just kept going higher, and now it's aiming for all-time highs. I really don't want to play longs on this because we've already done everything we need to do on the year. And I'd be very, very surprised to see gold made new highs. But silver has been doing that. So if you want to do that, then go trade this. But I just don't think I just think the euro is a better play, at least for me. So yeah, I wanted to cover EURAUD because we were looking for a trade here, and that trade worked out. The trade was to long EURAUD at this green box, and I was already filled completely on this candle. Yeah, I had limits all the way on this green box, all the way, and I was filled. The risk was that we had the RBA meeting on Tuesday, so that spike, this candle was formed during that event, but it didn't take out this low, which was our stop loss, right? And price was just contained within this green box. So in my opinion, there were no reasons to get short. And as I mentioned, this trade was the combination of two ideas. First is the idea that EURAUD tends to react very, very well from supply and demand levels. And this is one of the strongest demand levels you can find on this chart, the origin of this whole uptrend. So when price comes here, you are going to expect the most reasonable expectation is for price to bounce. And second idea was that this move lower was very, very one-sided. There are no lower highs because it's like I'm moving one go, right? So are you going to join the shorts at this level when it's already completed this whole wave into a key demand level? Even though we have the RBA meeting and they were hawkish, EURAUD closed the week higher. So the meeting itself, the news, they didn't mean shit. So the second idea was that sometimes it just doesn't, you don't need to think about where the best place to look for longs is, but what is a horrible spot for shorts. And this one was a very, very bad spot for shorts. Horrible risk reward. So the market just bounced into a level because we mentioned, we're looking for a trade back into 177 or the monthly open, and that's what happened. So for me now, I think that EURAUD is in no man's land. I wouldn't touch this. I think that, maybe an attempt into the monthly open is gonna get sold, and you're just gonna see chop around this level until it breaks either higher or lower. But I really don't want to get involved in here because the risk reward for me is horrible. Yeah, so we'll leave it there. Lastly, well, I also wanted to cover AUD because it's been so strong, right? It's been very, very strong. It behaved even better than the euro. However, it's rejecting from previous resistance, right? At the same time that it bounced, the euro AUD bounced from this level. So if you want to play longs against the United States dollar, you choose the euro. You don't choose AUD, right? Because it's just into resistance, and you're not gonna get short euro AUD here. It's better for the risk reward is better for longs here, right? So the whole thing about the RBA being so hawkish, it's a bit overheated and it needs to reset, right? So yeah, on the last place, I wanted to cover yen pairs like very briefly. I think they are just skewed to the upside until something changes on the macro landscape. But yeah, that's my view. And again, EURJPY is one of the best pairs to get long on. USD JPY is, in my opinion, is looking good, right? Because it had this downtrend here, and it was a very, very easy trade to take, which I didn't take, but you just needed hourly close above the trend line to get long from, and that was it, right? Even the reactions from the opens have been very, very clean on the weekly, on the daily, and on the monthly, right? Resistance, support, resistance, resistance, resistance. Very, very clean. I saw a lot of people getting chopped, trying to long around here, getting stopped out, and really all you ever needed was for price to reclaim the weekly open and pair that with a trendline breakout and get long. At the moment it gets below the monthly open, you get bearish or you exit your logs, right? But for next week, I think we've made a significant low for the month, and I think that USD JPY should go higher. But again, Euro JPY for me is a much better option, and actually I'd be surprised if Eurogen broke below this level. However, I would expect it to hold around here. So Eurogen is a great long, however, it just ranged here and it broke above. So I don't think it should break below this area, right? So something like this is what I would expect from the Euro Yen next week. So that was all, and see you guys in 2 weeks for the last market review of the year. Bye bye.